following trends. You're following companies like Apple all the time. Good morning to you, obviously, as well. How big of news is this? And is this important that something like Apple or a company the size of Apple can adapt this quickly to market trends?
Yeah, I'd say that's a pretty impressive move by them. Very quick adaptation, and I would say that we got to get more data on this. So let's follow up in about a week. Our research team is going to dive into this and see how many people are talking about buying this new phone. See what the excitement level is, what the sentiment level is. But yeah, I would agree. This is a great move by them. Cheaper price when people need it. Money's a little bit tight for most people, and maybe they're getting those federal stimulus checks and they're going to drop it on the iPhone. So let's definitely do a show in about a week with new data from LikeFolio.
All right, I'm looking forward to that. Tom, real quick here before we dive into the topic, I'm not seeing a ton of stock movement in Apple here. Maybe moved about $1 or so, and it looks like maybe even to the downside on this news, but pretty tight range if you look at the 1 day, 1 minute on Apple. So what do you make of this initial headline?
Well, I think they came out with the announcement that part of the proceeds will go to the COVID fund. So that probably washes out a lot of their profits. We did see the stock move up just a little bit. And this is their cheapest entry-level iPhone, the second iteration of the SE. So I think it's good, but you have to start looking at them pushing off their iPhone 12 or that 5G phone, maybe to possibly December on supply constraints, and maybe demand won't be there in September when they typically initiate or release new phones. I think that's probably going to be more on people's minds at this point. But we also did see a big tick up in sales out of China from really low levels in February. We saw a tick up in March also that was reported today.
Yeah, no, well said. And we'll touch base with Landon, the rest of the LikeFolio team, when we get a little bit more data on this. But Landon, I want to come to today's topic. Retail sales this morning, obviously not a great number, but was expected, to be a pretty bad number. So nothing, out of the realm of possibility there. The one thing in this space, and we're talking obviously some brick and mortar, some potential winners, and obviously I know that there's probably some companies that are struggling right now given the situation. But one thing's for sure is Amazon continues to kind of put a stranglehold on this space. Outside of Amazon, which we talked about countless times, and we're going to talk later on in the show, show me a bright spot. What companies are maybe weathering this storm a little bit better than others?
Sure. Well, Walmart and Target are both doing very well. Nike's doing well with the direct-to-consumer. But when we look at a couple of companies, I want to compare and contrast here, TJ Maxx versus Macy's. And it is a very hard contrast because when we look at these two companies, we can see how much people want to get back to shopping with these companies. And so, we can run analysis on Twitter data and say how many people are talking about, I can't wait to shop at these companies. And of course, the phrases there's hundreds that we're looking at, but that kind of sums it up. And you can see on this chart, there is a stark difference. It is amazing how much difference there is. Macy's, people are talking about 34% more wanting to shop there, where at TJ Maxx, it's about 1,300% more. So 12 or 13 times as many people. They can't wait to shop at TJ Maxx, and they're not able to right now. Not only are they not able to go into the stores, but their online stores are closed, which is kind of unheard of. I mean, I think that it's an execution problem. You compare that to like a Nike whose direct-to-consumer is booming right now. I think this is a failure by TJ Maxx, but they've got a ton of pent-up demand. People really cannot wait to go back into those stores. And Macy's, people just don't care. That is a dying brand, and our data is very bearish on them long-term. And the stock is reflective of that. I mean, initially Macy's was down, I think, 72% from their highs in February, and they've bounced back 25%, leaving them 64% off their highs, whereas TJ Maxx is only 25% off their highs. And so TJ Maxx definitely doing a better job, definitely has a stronger demand support base. Go ahead.
Quick follow-up for you, Landon, before I pull in Tom here as well. How much of this is because TJ Maxx is a little bit more of that off-price discount retailer that's really difficult for these companies to recreate online? We've talked about it more of the treasure hunt that you can't really recreate in e-commerce. At least they haven't done it well yet. And the fact that, maybe if I'm saying I want to go buy X brand, t-shirt or dress shirt, I might actually go do that at Macy's, but I'm not going to say like, oh, I'm going to go buy this at Macy's. Is there a little bit of that going on, or is this truly just, like you said, a dying company and one that's continued to, kind of weather the storm of both e-commerce and the COVID-19?
Well, I think it was dying before COVID-19, Macy's specifically. And when you talk about the difference in how people talk about these companies, yes, there is a difference certainly between all types of brands and how they mention them. But what we like to do is compare them versus themselves over time. And so whatever that change may be, it's going to be at least consistent within the company. So that's why we like to look at change over time as a percentage. And one of the things we look at, as this chart shows, is happiness. Macy's is at 60% happiness, which, as you can see, is basically tied for all-time lows. They're normally in the 65 to 70% range. People are just not thrilled with Macy's right now. They're not impressed. They don't really care that much that the stores are closed. They don't want to go back. And so this is a very big problem for the company. Like I said, they've lost a ton of their market cap. They're cut by 2/3 since February. Whereas the happiness for TJ Maxx is about 72%. Compare that to 60 for Macy's. So is a big difference between these two companies. And one of them, TJ Maxx, is poised to grab that market when things do open back up, and Macy's is not. So Macy's had a lot working against them before. I mean, the whole mall traffic issue was big for Macy's. People just were not going to malls nearly as much. And so this is just bad timing. They did not need any kind of reason for stores to shut down. And so Macy's is struggling, and now it's even worse.
Tom, chime in here. I want to pull you into this conversation. Any thoughts on this data so far? It's clearly painting a pretty bleak picture for Macy's. Things looking a little bit better on TJX, or any questions you have for Landon?
Hey, Landon, this is actually a good chart, because I know that, your data shows that people want to get back into these off-price retailers, right? The TJ Maxx and some of the other names, Nordstrom Rack. But do you believe if this pandemic and the shutdown is extended, we know that TJ Maxx's stock has held up pretty well in that retail space, even though you basically have to go to these stores to find what you're getting. Do you feel like maybe your data is not, it's reflective of people wanting to go there, but if they don't get to go there for the next couple of months, 3 months, maybe not until the fourth quarter, that we could see some dismal earnings reports out of this company over the next couple quarters?
Absolutely. Absolutely. I think that, they've been shut down since March 19th. So not quite a month, but we're coming up on it. And that's going to build up pent up demand. I mean, you can see it in this chart. The current quarter is reflective of that purchase intent being very high. That's that red square there. So people do want to go, but I don't think that if you hold them off from shopping via quarantine for another month or 2 months or 3 months, I don't think that there's a linear relationship between how long you hold them off and how much they go back and buy. They're probably just ready to go back and do one normal shopping trip's worth of experience, whether or not that's now or 3 months from now. So I think every day that we continue is bad for TJX. I think it's going to obviously be very bad for their revenues if they can't make credit card sales. But right now, if things, got back to normal, I think it'd be okay. It'd be a storm that they weathered. But if you go another 2 or 3 months, I think you're right, Tom. It could be very bad.
It's a great point, Landon, because I made the comment using Starbucks as an example. Is people might be looking forward to go back to Starbucks, but they can't go buy. They're not going to go buy 60 coffees for the 2 months that they missed. So you're only going to buy, what you were already going to buy. And the longer that this, chasm of store closures lasts, the harder it is for them to be making it up. But normally when I see this kind of information, Landon, my first thought is, short something like Macy's, buy TJX on a pairs trade for a trade example. But there's not a whole lot of downside left for a company like Macy's. And to me, there looks to be a lot of risk, even that if it does recover, that you're not really taking a great risk reward. So I'm almost interpreting this as avoid Macy's from your guys' perspective. Be interested maybe in TJX if you think things are going to recover shorter or shortly, as opposed to on a longer term. Is that how you're interpreting it?
Yeah, I think you're right. I mean, obviously we're very bearish on the amount of sales coming into Macy's in the future, and we're more bullish on TJX. But Macy's is down 64% from its highs in February, and TJX is down 25%. That's a huge, huge difference. And so it's tough to short low on Macy's and buy not quite high, but not as low on TJX. And so, yeah, I would definitely avoid Macy's. If you want to be aggressive, you could get into a more bearish position. But between the two, it's clear which one I would want to pick if I was betting on a retail bounce back. We know the consumers can't wait to go to TJ Maxx. This chart shows that it's incredible difference between these two. We know they can't wait to go back, and if things do open back up, and if consumers are able to go spend money, I definitely would bet on TJX over Macy's. But I agree, the pairs trade is a little bit scary because of the difference in how well they've performed recently.